This is Larry Williams on April 17th, 2020. I have just got to get some things off my chest here, guys and gals. Oh my gosh, the Cassandras, the purveyors of pessimism have been every place. I'm going to refute that, not with my opinion, but with data. Look at the data that I have to present to you about what's happened and what will happen in the future in the United States stock market. Well, to begin, let's go all the way back to 1918 when we had the Spanish flu. Began in May of 1918. It ended in the spring of 1919. Really didn't put stock prices down, did it? Interesting point. And there's more. You're now looking at the wave of the virus as it took place in 1918, 1919. Really interesting point here. We're going to come back and revisit this. In England, when it began, it took about 7 weeks, 6 to 7 weeks before it peaked, and then the virus ran its course. It had a second wave. That wave took about 5 weeks, and it ran its course as well. Please keep this in mind. I have some very interesting data to show you next. Remember how Italy was one of the first countries really hit hard by the virus? Well, from when it began to when it reached its zenith, its peak was about 33 days, 6, 7 weeks. And then since then, it's been on the downside. Now notice we have a bell-shaped curve here, don't we? It's a little steeper on the left-hand side and rolls over on the right-hand side, but clearly there's a bell-shaped curve here, which means if it took 33 days to get to the peak, we can go out 33 days and we get a pretty good idea of when it's going to be over. Now, instead of looking at just Italy, we're looking at all cases in the world. Notice again the bell-shaped curve. Once it started to begin, about 23 days, it got really active on the upside, the number of new cases, which is what we're looking at here, and now we hit that bell-shaped curve. 23 days, of course, we'll go back to when it started. Again, it's about 6, 7 weeks, which means this bell-shaped curve comes up and will come down with a projected return to normalcy somewhere in this time period about May 5th. The driving economy of the world is the United States. So let's take a look at the United States next. And here it is. Look at this again. We see the same 6, 7 weeks to reach the zenith, the bell-shaped curve, and then we start to go down. Now, this is not unusual to this virus. If you study these viruses, you will see that all of them have that first wave of 33, 35, 39 days. Somewhere in that time period is the life of the virus. It comes up and then it goes down. So we can make a projection. It took 31 days to get from here to here. If we continue this general shape of the bell-shaped curve, guys and gals, May 11th, we're back to a semi-normal world. Will it ever be totally normal? No, it never was normal to begin with, was it? But we're going to return to sanity, to the markets opening up, to people going back to work, back to school, to another productive environment. It won't happen all at once, and this curve is a little slower coming down than going up. But generally speaking, it looks to me like this is when it's about over. With that in mind, let's next take a look at the stock market. You could say this is not our first rodeo. We have seen this similar pattern before. The blue line that you see is the average prices of 1957, 1999, and 1966 on average. Look how closely this market has followed that pattern and what it suggests for the future. And that's largely because 1957, which is a pretty close fit to this market, started a hellacious bull market to the upside. Frankly, I don't put a lot of stock into these price analogs, but I do look at them and I see a lot of similarity here. Another reason to consider we may be starting a huge bull market. I am using the Timing Solutions software to develop a weekly cycle for the Dow Jones Industrial Average, and we are at a cyclical low, which is just a cyclical high coming, but quite a ways off. We'll rally up, a pullback, and then we'll see a more significant selling point. Now remember, the cycle projections don't tell us how big the decline will be. It just says sell here, buy here, sell here, buy there. It does not address the magnitude of the move. That's based on the news and the fundamentals of the time period. But clearly, we're in an up wave in terms of the weekly cycle. On a shorter term basis, using daily charts, it looks like this rally can go until the end of April, 23rd, 25th, a pullback, and then a buying opportunity around the middle or if not latter part of May. Now, the big question, will we pull back here? Will we retest? Will we go back to those old lows? I've already answered that. You may have seen that on Jim Cramer's Mad Money or in the StockCharts.com video that I did. In the event you didn't see it, let me show you the answer to that all-important question. You can go to YouTube and Google Larry Williams StockCharts.com, and you'll see my presentation on this under the title Eve of Destruction, based on the old Barry Maguire song. The point I made was when we've had a bear market and we rally back more than 50% on a weekly closing basis, we don't go back and retest the lows. Well, look what just happened. We've gone above the 50% correction. We're looking at the Dow Jones Industrial Average here. It was touch and go on a weekly basis last week. This week we cleared the hurdle. I seriously doubt, because going all the way back to 1900s, whenever we've had a 20% correction in the Dow Jones Industrial Average or the stock market averages, we have not rallied back close to close 50%. We did it this week, and there's more. A week ago, I said we were at the moment of truth because the S&P 500 was right on the 50% correction line, and here we are this week. We blasted through it. It gets better. We are now looking at the NASDAQ. Whoa, look at this. It's been much stronger than any of the other average, and that's positive. Why? Because after a serious substantial decline in the market, if money is coming in and willing to pick up more speculative issues like on the NASDAQ, that's really aggressive money. Typically at market bottoms, people are buying more blue chip stocks, but occasionally you'll see big money step right in and buy speculative stocks, so they really believe in the future. They're not frightened of it. And look at the NASDAQ. I mean, we're almost back to new highs. So you might want to watch the video that I've done on YouTube for StockCharts.com. It's the most interesting take on this. People hate them. Oh my gosh. You should read the emails I've gotten this week from people swearing at me, calling me all sorts of vile names because I was bullish. Started to get bullish about 4 weeks ago. You probably saw that. You saw it on my Larry TV program as well. It's just incredible how angry these people are, how upset they are. The last time I saw that, it was in 1982 when I wrote a book, How to Prosper in the Coming Good Years. I was on Good Morning America, all the talk shows. Oh, people were incensed. They hated the bullishness. So I see that same thing happening again. We see stock prices reacting positively to the upside. You've seen the data behind the virus. Was it a straight path, Devenir? No, of course not. We'll go back and forth. But guys and gals, there's a future ahead of us, and it's bullish. This is Larry Williams wishing you good luck and good trading.